What's up, guys? Welcome back to my channel. So in this episode, we are diverting to leverage, guys. In previous episode 6, we talked about risk management. So in this episode, we are diverting into leverage. So this is episode 7 on introduction to Forex Trading, guys. So guys, what is leverage? So what do you understand the word of leverage? So leverage is the ability to use something small to control something big. Yes. So leverage, let me break it down to you. Leverage, normally brokers normally offer us leverage in order to use small capital to make big money. Like Xness normally they normally have like around 1 to 100, 1 to 500, 1 to 1000, 1 to 2000. Even in Xness broker, they are unlimited leverage because leverage are used. So the higher the leverage, the higher the risk. So leverage are used to control big money. Imagine, let me give you a short story about leverage. So when I deposited $10, so maybe 3 or 4 years ago, so and I flipped the account from $10 to $240 in a week because I used leverage of 1 to 2000. So I used leverage of 1 to 2000. This give me long chance to stack in trade with $10. I can stack in 10 position. I can stack in 5, even in $10. I can risk all. But if I've used like maybe leverage 1 to 500, it will be very difficult. Even broker will not allow me to use to risk the all profits and the all capital rather, because I use limited leverage or I use risk management leverage. Assuming now on the account of $200,000 account, I use leverage of 1 to 100. So there's a limited lot size you can use. Compare on account of 100k with a leverage of 1,000, 1 to 2,000 leverage. You can risk the whole capital. So leverage is a caution for us in other way not to risk our capital. So in which if we take the leverage limits like 1 to 500, 1 to 200, 1 to 100, but you can still say that leverage is what can give us opportunity in terms of risking our capital to make money. In trading, you have to risk. The higher the risk, the higher the reward. You can't compare a $10,000 account with a $500 account. Their risk is different and their leverage is different. So even they may have equal leverage, or their risk is different. So in order the returns, so their reward will be different also. Even let's break it down. If the $500 account have leverage of 1 to 2000 and it reached the whole $500 account on a single trade, and maybe it made around 3%, that is 1,500, right, in a single trade. So that means it make 3%, and a $5,000 account also risk his whole account on the same trade, same strategy, same entry, same exit, and him also made 3%, which means he made $15,000. So the first trader made $1,500. He made it based on leverage because the leverage allowed him to risk the whole capital. And the same thing goes to a $5,000 account. So leverage allowed him to make that $15,000 because it gave him allowed him to risk the whole $5,000 in market. So that's a short word that I can explain about leverage, guys. So let's move to another thing about I've talked about lot size. So I've talked about currency pair, the base currency, the quote currency. I've talked about it in so I just want to round up this episode. So let's talk about the new order. So in MT4, you have some orders in MT4. So you have the buy order, the sell order, we have buy limit, sell limit, we have buy stop, sell stop. In market, we have like 5 orders. We have market execution, 5 buy stop, sell stop, buy limit, and sell limit. So let's dive into that. Let me show you something in MT5 rather. So this is MT5. So this is the interface of MT5 rather. So in this MT5, maybe I want to let me show you something on this point. So you see this market execution. If you want to place a buy, just place a buy here. So the buy will active instantly. In a way that I can set my SL, my TP. So now it seems good to sell. If I want to place a sell here, the sell will active instantly because it's an instant entry. So which I will place my stop loss and TP here. Now let's move to different order. This is the buy limit. On this buy limit, this is what I normally use. As you can see, buy limit here. This is my buy limit order. So in which that I'm expecting price to come back to this zone. So my limit order is already there. Once price come back to this zone, I meet my limit order, tap into it, then I will be in position. I may be online, I might not be online, I may be anywhere. So I don't have to disturb myself about limit order. All I just have to do is do my analysis, project that okay, price. If price reach here, I want to buy. So one thing that will help me not to be wasting a lot of time or waiting on the screen is that just place your buy limit and go somewhere else. So from there, I can have a long time to do whatever I want to do. Once I set my entry price, like this is my entry price, I set my stop loss. This is my stop loss, my TP. Here's my TP. Then tap place. Same go to sell stop. Sell limit rather. If I have something like okay, if price have reached here, I want to sell, I want to do this, I want to do that. So once price reach there and tap to my sell, then I get into it. Now let's talk about buy stop. So on this buy stop, maybe there's a buy stop order, so in which market is above. I can place a buy stop around here, in which okay, let me give you an analysis that if market reach this point, this level, assume if market reach this level, maybe I've placed my buy stop around this point. So if market reach this level, I want the market to be continuing buying. Yeah, I want the market to be continuing buying. So in which I will place my stop loss above my buy stop. That means if market have reached here, I want the market to be continuing buying. That's all about the buy stop. So it seems good to sell stop also. So sell stop is that I will place my order on a selling point, in which if market reach here, I want to get in automatically. That market should be continuing selling. That's fine. So if market just reach my sell stop and it trigger my entry and go against me, maybe it buy against me, so that means I will out of trade. Just vice versa. So one is the instrument for all these demand and supply traders like me, and one is for all these resistance and support trader. So all those supports wait for a support cut, support break or resistance break. Some trade trend line and pullback. So there is trend break and retouch and retouch. So that's all. So this is just the discussion about market, guys. So let's move to mistake. Yes, what are the common mistakes traders do? Sorry, before that, let's move to type of trader, guys. So in trading, we have 4 type of trader. We have scalper, we have day trader, we have swing trader, and we have positional trader. So let me explain to you. A scalper is like a person that doesn't want to wait in market. Just like 15 minutes, 10 minutes, 30 minutes is okay. You just have to scalp like few pips in market. So this require let's take the fact about the scalper. So this require him to use a long, like a wide stop loss. Sorry, a wide lot size. Imagine you want to make 10 pips of trading. You can't be using 0.01. Scalpers and scalper normally use from 10 minutes time frame, 5 minutes time frame. Even scalper execute their entry in 1 minute time frame because they are scalping. They execute their entry in 1 minute time frame. So that's what scalper do. So day trader normally target like 40 pips, 60 pips, and normally entering their entry through 15 minutes time frame. Likewise, swing trader normally watch their higher time frame like H4, H1 daily. So they normally enter trade. Some enter in 4 hours, some enter in 1 hour. So same to happen to position now. So those are what they can leave a trade for years, months. Although swing trader normally open trade maybe 2 to 3 days or 4 days, in weeks. Swing trader normally close their trade during weeks. I've been in position for a week. It was high like this. I'm a dynamic trader. I may decide to be day trader today. Once I spot a position that give me a swing, I can take it. But for now, I'm just a day trader. But sometimes, if I want to see maybe this trade is a move, because I have both system that works for my swing and day trader. That's why it's good to be a dynamic trader. I can take a buy to where I'm expecting a large sell. You get the vibes. Maybe I know that this piece is my sell point. So for a large sell point, so I can just take a buy. That buy will be a day trade. It's the day trade buy, not a swing trade buy. Market is unpredictable. You can just go against it. So that buy will be a day trade buy to where I'm expecting a large sell. You get it? So that's what dynamic trader do. They don't normally stick to maybe they normally watch swing day. That's all. So about the positional trader, so they normally leave trade for years. Even day trader normally close trade daily. So they don't open trade and close it in the next day. No, that's not what day trader do. They open trade the same day and they close it the same day, guys. So that's all about the trade. And those positional trader normally watch like H4 time frame, weekly, daily. If they normally enter the position through daily. So some scale down, they scale down to maybe H4 with the like, but they don't enter the trade daily. The other thing is that just look out for you. Is that know the person who you are. So know what you can take. If the swing trader is okay for you, then maybe you are a work person. So you are a busy man. You can just stick to the swing trader. Learn the swing trader in the swing system. And then you are good. If you're a scalper that you don't have much time in the market, you just have to scalp with a few pips and then move. The best thing is that know the person you have, know the kind of system you want to trade. Once you spot it and stick with it, with times you get to it, you know the core and parts of it, so you know the inside and outside of the system. From there, you'll be making money. Money don't come overnight, guys. Let's say the fact. But money comes from where you know yourself. The day I spot the person who I am, there's the day success unlocked for me. And let me say, that's the day the door open. Since then, I've been making money back to back, passing profit challenge. Once I spot my strategy, it gave me a rules for myself, and I have the written rules. So that's the best thing about yourself. You can be a day trader today and tomorrow be a swing trader. So that's enough about the trading. So let's move to how to make money in Forex. So today now, thank God, in the area of profit, you can make money through profit challenge. So it's very hard. Although let's say the fact profit is very hard. Thank God that they have removed the time limit. And nowadays when there is a time limit, 2 months, 3 months, all this is very, very hard. But alhamdulillah, these days now there's no time limit. It's unlimited. So once you import an account, first thing you have to do, I still make video about how to pass the profit. I'm currently making a profit journey trading, but there's an insight that I'm going to make about it, guys. Don't worry. The video will be house soon. So you can go for a profit challenge, maybe FTMO, maybe my Forex fund, maybe for the next, maybe Marvins, maybe Alpha Capital. We have a lot of profit. Just look out for a good one. I want to recommend one for you. Just look out for a good profit. Know their rules. Ask questions. Check their profit match. Check Trustpilot. Go and chat those that are their profit match. Check out. So just know maybe they're good profit. And you know that not to come because there's a way there is a lot of scam profit. I've been scammed before. A lot of people have scammed me. So that's why. So it's good to look out for which profile am I going to put my money into it. You're hiding money, you have to put it to somewhere safe, not on a scammer's hand. That's what pain a lot about this industry. So that's all about the passive income. Or you can make money through deposits. You can just go and deposit straight into your broker. But I'm just giving an advice. Start with profile. Profile will make you a disciplined trader, because there's a set of rules so that you are going to abide with. The 5 daily drawdown, the 10 overall drawdown, all the rules. So this will guide you to become a disciplined trader. Once you spot the rules, once you know the rules, then you'll be a disciplined trader. You'll be free from revenge trading. You'll be free from fear of missing out. You'll be free from a lot of things that attack trader through psychologically. So that's all. So if you're good at deposit accounts, is good for you also, then you can go to that. There's a lot of brokers that normally accept $10 as a minimum deposit, like Exness and others. Even though there's a broker that accepts $1, like FBS. One accept $1, guys. So let's move to a common mistake that trader does. So normally traders do some sort of mistakes. Alright guys, so in the next episode we will continue from common mistake trader made. So don't worry guys. Thanks for watching guys. Peace out.